Welcome back to TalkTickers.
Yeah.
Today, we're going to be diving into Enterprise Products Partners Q3 2024 earnings call.
Right.
They just wrapped this up.
Yes, they did.
Ticker symbol EPD for those following along at home.
And, at first glance, they've delivered a pretty solid quarter.
Yeah, let's get into the numbers here a little bit.
Okay.
Adjusted EBITDA came in at a hefty $2.4 billion.
Yes, and distributable cash flow.
Right.
Or DCF, the lifeblood for those income-focused investors who love those EPD distributions, reached $2 billion.
Wow.
Importantly, their coverage ratio sits at a very healthy 1.7 times, with a substantial $808 million in retained DCF for the quarter.
So, for you listening, this means EPD is sitting pretty financially.
Yes.
Able to invest in future growth while keeping those distributions flowing.
Absolutely.
But, it's not just about the bottom line.
Right.
Operationally, EPD had a standout quarter.
They didn't just meet expectations, they shattered them. We're talking about not one, not two, but 5 volumetric records broken.
5. Wow, what were some of the highlights?
Well, their inlet natural gas processing volumes hit a record 7.5 billion cubic feet per day.
Wow.
And they moved a staggering 12.8 million barrels a day of crude oil equivalent through their pipelines.
Those are some serious numbers.
Big numbers.
What's driving this success?
Well, a couple of things.
Okay.
First, their strategic investments are paying off.
Uh-huh.
Those 3 new natural gas processing plants that they brought online are humming along nicely.
Right.
And second, they're capitalizing on favorable natural gas price spreads.
Okay.
EPD is making some really shrewd moves in a dynamic market.
And it sounds like they're not letting up anytime soon.
No.
They've got a full slate of growth projects in the pipeline, so to speak.
They certainly aren't resting on their laurels.
Yeah.
2 more processing plants are slated to come online in the Permian Basin next year. And they're also looking at completing the Bahia pipeline and phase 1 of the Neches River NGL export terminal in 2025.
The Permian Basin is a hotbed of activity, and EPD is clearly doubling down on their presence there.
Absolutely. And, further out in 2026, they've got another processing plant planned for the Delaware Basin.
Wow.
They're strategically positioning themselves to capture growth across multiple key energy-producing regions.
Right.
But that's not all.
There's more.
They've also made waves with a recent acquisition.
You're talking about the Pinion Midstream deal, right?
Exactly.
Everyone's buzzing about that.
Yeah, this acquisition is a strategic power play, solidifying their position in the Permian Basin even further.
Okay.
What's particularly savvy is that it's not just about acquiring assets, it's about integrating EPD's NGL value chain.
Let's unpack that a bit for our listeners.
Okay.
What does this integration actually mean?
So Pinion specializes in treating services for sour natural gas.
Okay.
Something that's been in short supply in certain areas of the Permian.
Right.
By bringing Pinion into the fold, EPD can now offer producers a seamless integrated solution from gathering and treating to processing and transportation.
Okay.
EPD is becoming a one-stop shop.
That's a powerful value proposition for producers.
It is.
But EPD isn't just focusing on traditional energy plays.
Right.
They're also eyeing a potentially massive opportunity in a somewhat unexpected place: data centers.
It's a fascinating development.
Yeah.
Texas is emerging as a major data center hub, and these facilities are incredibly energy hungry.
Yeah, I can imagine.
And guess what they rely on for power?
Natural gas.
You got natural gas.
Okay.
And EPD, with their existing pipeline and storage infrastructure strategically located around Dallas and San Antonio, is perfectly positioned to capitalize on the surge in demand.
It's almost as if they saw this coming.
It seems that way, doesn't it?
Yeah.
Their existing assets, combined with the Texas Energy Fund support for new gas-fired power plants, make them a natural partner for these data center developers.
So while many are talking about the data center boom, EPD is quietly getting ready to reap the rewards.
That's right.
But let's shift gears and talk about ethane, a key component of natural gas liquids.
Right.
The current market is a bit of a head-scratcher.
It's a delicate balancing act.
Oh.
Ethane storage is currently at capacity, and new demand isn't expected until next year when those export facilities finally come online.
Right.
This could lead to a reduction in ethane recovery, with producers opting to leave more ethane in the natural gas stream.
So what does this mean for EPD?
Well,
is this a threat or an opportunity?
It's Potentially both.
Okay.
On the one hand, reduced recovery could impact volumes,
Yeah.
but EPD, with their significant storage capabilities, is well positioned to capitalize on price fluctuations.
Right.
Buy low, sell high, as they say.
Of course.
It all depends on how they play their cards. Yeah, it's a fascinating game of strategy, that's for sure. Speaking of strategy, let's turn our attention to another interesting development: the rising LPG export dock spot rates.
Right. EPD's docks are largely locked in with contracts,
Right.
but they've wisely increased their capacity at the ship channel.
Smart.
This allows them to take advantage of these higher spot rates with a couple of extra cargoes per month.
Yeah, it's a shrewd move, squeezing out extra revenue from their existing assets. It shows they're laser focused on maximizing returns in every corner of their operations.
Now let's talk about how EPD is allocating capital and returning value to shareholders.
Okay.
They've upped their capital expenditure forecast for 2025 to a range of $3.5 billion to $4 billion.
Wow, that's a significant increase, and it's largely driven by the opportunities stemming from the Pinion acquisition and a potential CO2 pipeline project with Oxy.
They're also putting their money where their mouth is when it comes to shareholder returns.
Yeah.
They repurchased about $76 million worth of shares in Q3 on top of their steady dividends.
It's a balanced approach that should appeal to a broad range of investors, those seeking growth and those looking for income.
Right.
But beyond the numbers, I'm always interested in what companies are hearing from their customers and their overall outlook on the market.
Yeah.
What did EPD have to say on that front?
Well, they seem to be getting mixed signals.
Okay.
On the one hand, they're seeing steady growth in the Permian Basin, which is reassuring that stability helps to offset some of the uncertainty they're seeing in other areas.
Makes sense, but they also mentioned an intriguing trend.
Okay.
Producers are increasingly shifting their focus towards gassier basins,
Okay.
which has interesting implications for future demand.
So if I'm following you, this shift could mean a continued surge in demand for natural gas processing and transportation,
Yes.
services that EPD is perfectly positioned to provide.
Exactly. While there are certainly challenges and uncertainties in the energy market,
Right.
EPD seems to be adept at navigating them. They're identifying opportunities, making strategic investments, and delivering value for their shareholders.
They're not just riding the waves, they're charting their own course.
That's right.
And they're doing it with a keen eye on the future. One of the things that struck me during the call was their emphasis on data and its growing importance in the energy sector.
It's a theme we're seeing across the industry.
Uh-huh.
EPD is investing heavily in their data analytics capabilities,
Okay.
and they're finding innovative ways to leverage data to optimize their operations, everything from predictive maintenance to market analysis.
Wow.
They're even using real-time data to make split-second decisions about pipeline operations, maximizing efficiency and profitability.
They went so far as to call data the new currency. A bold statement, but perhaps not far off the mark.
Data is becoming an increasingly valuable asset, and companies that can harness its power will have a distinct competitive advantage.
Right.
EPD seems to be at the forefront of this data revolution in the midstream sector. But let's circle back to the Pinion Midstream acquisition for a moment. It's worth digging a little deeper into why this deal is so significant.
Absolutely. As we touched on earlier, Pinion specializes in treating sour natural gas.
Yes.
This isn't just any type of natural gas. It's gas that contains high levels of hydrogen sulfide,
Right.
which is corrosive and can pose environmental risks.
Exactly. It needs to be treated before it can be safely transported and processed. And here's where the strategic brilliance of the acquisition comes into play.
Okay.
The area where Pinion operates in the Permian Basin has been underserved when it comes to treating capacity.
So EPD saw an opportunity to fill a critical gap in the market.
Precisely by acquiring Pinion, they're not just gaining assets.
Right.
They're addressing a real need and creating a new revenue stream.
Okay.
This move will allow them to attract more producers looking for reliable and efficient sour gas treating services.
It's a classic case of identifying a market need and then moving decisively to capitalize on it.
And it reinforces EPD's commitment to that vertical integration strategy we discussed earlier. Producers can now turn to EPD for the entire spectrum of services, from gathering and treating to processing and transportation. It's a powerful proposition.
And it seems to be resonating with the market.
It is.
EPD mentioned receiving overwhelming interest from producers following the acquisition announcement.
Wow.
This could be a significant growth driver for them in the years ahead.
It's certainly a development worth watching closely, but While this acquisition is a major piece of the puzzle,
Right.
it's just one part of EPD's broader growth strategy. They're pursuing a multi-pronged approach, combining organic growth, strategic acquisitions, and a willingness to explore emerging opportunities.
They're not putting all their eggs in one basket.
Exactly. They're investing in expanding their existing infrastructure. They're actively evaluating potential acquisition targets, and they're keeping a close eye on new technologies and market trends.
We've already talked about their interest in the data center boom.
Yes.
But they're also exploring other potentially transformative areas like carbon capture and sequestration.
It's clear that they're not content with simply maintaining the status quo.
Right.
They're actively seeking out ways to innovate and evolve to stay ahead of the curve.
It's a mindset that's essential for long-term success in any industry,
Absolutely.
but especially in the dynamic world of energy.
And let's not forget their commitment to returning value to shareholders.
Right.
They've consistently increased their distributions over the years, and they're actively repurchasing shares.
Yeah.
It's a balanced approach that seeks to create value for both the company and its investors.
It's a strategy that seems to be working well for them. But beyond the financial metrics and strategic initiatives,
Yeah.
there's another aspect of EPD that I think is worth highlighting.
Okay. That's that.
During the call, they spoke about the importance of their culture and their employees.
Ah, yes. Their commitment to creating a positive and supportive work environment is well known.
They emphasize the dedication, talent, and creativity of their workforce,
Yeah.
highlighting how integral their employees are to the company's success.
Right.
They also talked about their focus on safety training and employee development. It's clear that they view their employees as their most valuable asset.
And that's a perspective that's becoming increasingly important in today's competitive job market.
It is.
Companies that prioritize their employees and create a culture of respect and opportunity are more likely to attract and retain top talent.
And that in turn drives innovation, productivity, and ultimately long-term success.
It's a virtuous cycle.
So as we wrap up our deep dive into EPD's Q3 2024 earnings call, what key takeaways should we leave our listeners with?
I think it's safe to say that EPD is a company that's firing on all cylinders.
Okay.
They're delivering strong financial results, they're investing strategically for the future, and they're committed to returning value to shareholders.
They're also demonstrating a willingness to adapt and evolve,
Yes.
embracing new technologies and exploring emerging opportunities.
They're a leader in the midstream sector, and they're setting a high bar for their peers. But I think it's important to acknowledge that the energy landscape is constantly changing.
Why, of course.
There are always challenges and uncertainties to navigate.
So while EPD has a lot to be optimistic about, it's crucial that they remain vigilant and adaptable.
Absolutely. They need to continue to anticipate market shifts, embrace innovation, and prioritize their employees.
And of course, they need to stay focused on delivering value for their investors.
Well said. Now, before we move on to our final thoughts, I want to pose a question to our listeners. Something to ponder as they consider EPD and their place in the evolving energy landscape.
Okay, all ears. What's the question?
Throughout this call, EPD has presented a compelling case for their continued success. They've highlighted their financial strength, their strategic investments, and their ability to capitalize on emerging trends. But what would happen if the demand for natural gas were to plateau or even decline in the years to come?
That's a thought-provoking question. It's certainly a possibility, especially as renewable energy sources gain traction.
Right.
EPD has built its empire on being a key player in the natural gas value chain. But what if that chain starts to weaken?
Exactly how would they adapt? What new opportunities would they pursue? Would they be able to pivot successfully and maintain their leadership position in a changing energy world?
Those are questions that only time will answer. But EPD has a track record of making smart decisions and navigating complex challenges.
They've also shown a willingness to embrace new technologies and explore new markets.
So while the future is always uncertain, I think EPD has the vision and the agility to adapt and thrive no matter what the energy landscape may look like in the years to come. It's a bet on their adaptability for sure.
Right.
And they've given us plenty of reason to believe they can navigate those shifting tides.
They have, but it's a question worth pondering for any long-term investor.
Right.
You know how much of EPD's success is tied to the continued dominance of natural gas?
Right.
And how prepared are they for a future where that dominance might be challenged?
Yeah, it's a balancing act for sure.
Yeah.
On the one hand, they need to maximize the opportunities in front of them today.
Right.
And natural gas is undoubtedly a major part of that.
Yeah.
But they also need to keep an eye on the horizon. and be ready to adjust their course as the energy landscape evolves.
And that's what makes this such a fascinating company to follow.
Yeah,
They're not just riding the waves, they're actively trying to anticipate and shape them.
they're playing a long game, and they're playing it strategically.
They are.
And so far, they seem to be winning.
Indeed. Now, before we wrap up this deep dive,
Okay.
I'd like to leave our listeners with a few final thoughts to consider as they evaluate EPD and its potential as an investment.
Always appreciate your insights. What should our listeners be thinking about?
First, it's essential to recognize that EPD is at its core a long-term investment.
Yeah.
Their business is built on a foundation of stable fee-based contracts,
Right.
providing a level of predictability that's rare in the often volatile energy sector.
Makes sense.
They're not as susceptible to the wild swings of commodity prices as some other energy companies.
So for investors seeking steady, reliable returns,
Yes.
EPD has a lot to offer.
Exactly. And those generous distributions, consistently growing year after year, make them particularly attractive for income-focused investors.
Their commitment to returning value to shareholders is undeniable.
It is.
But what about their growth prospects?
Right.
What should investors be watching for in the years ahead?
Well, I think their vertical integration strategy, which we've discussed at length today,
Yes.
is a key differentiator.
Okay.
By controlling more of the value chain, from gathering and processing to transportation and storage,
Right.
they're able to optimize their operations and capture more value at each stage. It's a strategy that served them well, and they're clearly committed to expanding it further.
And as we've seen with the Pinion acquisition,
Yes.
they're not afraid to make bold moves to solidify their position in key markets and expand their service offerings.
Precisely. And let's not forget their growing focus on sustainability.
Right.
It's not just a buzzword for them. They're taking concrete steps to reduce their environmental footprint and promote responsible operations. This commitment is not only the right thing to do, but it's also becoming increasingly important for investors who are prioritizing ESG factors in their decision-making.
It's a sign that EPD is thinking long-term and positioning themselves for a future where sustainability will be paramount.
Absolutely. And finally, I'd be remiss if I didn't mention their strong corporate culture.
Right.
They genuinely seem to value their employees.
Yes.
Fostering a work environment that prioritizes safety training and development.
It's a point they emphasize throughout the call.
Yes.
And it's clear that they see their workforce as their most valuable asset.
And in today's tight labor market, that kind of commitment to employee well-being can be a significant competitive advantage. It's a key ingredient in attracting and retaining top talent, which ultimately drives innovation and growth.
So to sum it all up, EPD is a well-managed company with a solid track record, a clear vision for the future, and a strong commitment to both growth and shareholder value.
They're a company worth watching, and I think they have a lot to offer investors who are looking for a combination of stability income and growth potential.
Well said. I think that's a perfect note to end on. It's been a pleasure dissecting this earnings call with you. I always appreciate your insights.
The pleasure was all mine, and as always, we encourage our listeners to do their own research and come to their own conclusions.
But hopefully we've provided a solid foundation for understanding EPD's business and their prospects for the future. Until next time, happy investing.